Okay, well, let me please call on stage Martin Quensel. He's co-founder of Centrifuge. Then also Milko Pavlov. He's managing director of Holuan Luki. Quite difficult word to say. I practiced it last night together with Milko. Mark Winkler, who is a colleague of mine working for Global Advisory Corporate Banking. And then Paolo Bortolin, he's deputy CEO of Lugano and also part of the task force for blockchain in Lugano. As before, I was saying that one of the objectives is actually to combine and to see how we can bridge traditional industries with blockchain. I think this is already a good start to see how this actually is really happening. And therefore, I pass you the word to a little bit introduce yourself and explain what you guys are actually doing.
Thank you, Sascha. Can I get a...
Oh, here we go.
Yeah, thank you. Thank you, Sascha. So my name is Martin Quensel. Founded a real-world asset protocol. That's how crypto is calling traditional assets or everything which is an asset, but not crypto today. Already in 2017, went through all the ups and downs of crypto, and it really feels like this time the market is really stepping up and starting to deliver on the promise beyond having a use case beyond crypto.
Yep, thank you very much. Milko Pavlov, I'm managing director. I lead the valuation efforts for Wullschleger Loki. Well done, Sascha, on the name. We are an investment bank, 3,000 people globally, listed on the New York Stock Exchange with, depending on the day these days, circulating between 10 and 13 billion. Our focus has been on the real world assets, and we deal with private equity, private credit, and hedge funds where we value their illiquid exposures. And as those have been growing throughout the last, I'd say decade, we are seeing that some of our clients and some main participants are actually looking for ways to create liquidity within those structures. And hence we can discuss further. And please,
Thank
Mark.
you. Mark Winkler, Bill Suisse. I'm part of the Global Advisory team, which is an in-house corporate finance boutique where we assist our family offices, high net worth entrepreneurs with everything they need on the corporate finance platform. Can it be providing liquidity over illiquid assets? So it's already a bridge that I have here with Milko. But also working, and I think that's the interesting part, since roughly 12 months, we see digital asset platforms and capital raising there coming also across our desks, which shows to us that basically we finally, after, let's say, my first introduction 10 years ago about digital assets and crypto, that we finally now see it coming into practice. So interesting to see also how the panel members look at it.
Yeah, first of all, welcome to Lugano, in the name of the city of Lugano. I'm representing the city today, so we have some good weather for today. Yesterday was kind of not so good, but welcome to everybody coming from Zurich, either from Lugano or the rest of the world. My function is kind of mix between managing the finances of the city of Lugano and then managing, or not managing, but be part of the Plan B project, which I remember the B of the Plan B is the B of Bitcoin. So it's a very strong statement from the city of Lugano, well known around the world now. Today I'm here to present or to speak, I think for the third time, about digital bonds. I'm the person who issued the very first digital bond in Switzerland, I think around the world too, which is a full characteristic bond. I already have 3, and then in the future we will go for others bonds. So I'm not stopping there. So this is a little bit why I'm here today, and thanks for the invitation.
Yes, well, of course, you're also here in Lugano, so we all have to be good friends as well, no?
Absolutely.
But yes, you were a first mover in being able to list digital bonds on SDX. How did this actually come along? What did you do to this? And the second question is, how do you see institutionals embracing more and more blockchain investments or digital bonds investments?
Yes, let's start from the beginning. In 2020, we issued our own stablecoin. Lugano has its own payment token. I'm not going to tell the story. It's very long, but very interesting. Go to check online. It's the Luga token. Then we had our own blockchain, and then we launched the Plan B initiative, which aims to attract companies on the blockchain and crypto ecosystem. So in 22, when I had to issue bonds, City of Lugano has a high level of debt. Unfortunately, we have 1 billion debt, which is high, but still manageable. Since we had this focus on blockchain, and since in Switzerland, SIX, which is the financial infrastructure, market financial infrastructure in Switzerland, they launched a SDX, which is a digital platform, a digital exchange based on blockchain. To me, it was very normal to say, okay, let's do my next bond there. Nobody was moving there. At that time, that was 22, 23, it was very strange talking about digital assets. It's just 3 years ago, imagine. So how the world is changing very fast. And to me, it was very normal. So I started this process, which I thought it was a very easy process, but being first mover, it was a big pain, really big pain. Normally, in the traditional market, it takes me like 1 hour and a half to get ready for a bond, for a 100 million bond. It took me 5 to 6 months to get ready. Why? Well, just because I had to understand what it meant, and then to convince Moody's about the rating. We have our official rating from Moody's. I thought it was everything fine, but it was not. Moody's say, okay, we never rated a digital bond, so stop everybody. We start working on it, and we are using you as a case. Cool, but it took me 4 months to reach the point. And then there were many, many other stuff like, will the rating be the same? Will the spread be the same? Will investor underwrite the bond? Because it's another way to do the custody, so nobody knows about it. So this was the real difficulties to be the first mover. We did it in January 23, and I came here to speak, I think, in May 23. Successful bond, everything went well. The rating was the same, spread exactly the same, cost the same. We raised the capital in 1 hour and 15 minutes. So everything was really an experiment, but real experiment, because if you fail a bond in the market, then the next bond is very difficult for you. So you cannot even try too much. But we took the responsibilities with the mayor, and we went really far away on this. Then we issued a second one and a third one.
Very good. Well, this shows that actually the institutional world is embracing digital bonds. And this shows that what I was saying before, Lugano is open to innovation and embracing the new technology. So that's also very important. That's, again, why we are all here. Mark, you know that at the end, I'm in wealth management. I like to generate revenues. I like to satisfy our CEO that at the end of the year is happy and we can continue to grow. And I'm also trying at the end to bridge this part of blockchain, tokenized assets, real world assets. And what we have as BIL, we have a quite large balance sheet. So how do you think in the future we can convince our friends and our owners in Luxembourg to slowly open the gate there and we can build something together with the people that are already here on stage?
That's a very poison question to me, because then you put me in the position of the head of strategy of Bill. What I have experienced in my previous environment is that for banks in itself to develop or adopt complete new technologies and concepts is very difficult to do. At my former employer, we did it in our own incubator, which was the benefit that basically you can learn and basically just the experience here in Lugano, setting up a digital bond. Basically do it step by step, you learn, and from that you can implement it. So I do not see that Bill in itself will be at the forefront and be the bank that will basically make the revolution towards adapting digital assets and solutions broadly. But I think in 3 to 5 years from now, there will be several parties across Europe that effectively have done that for banks. And whether we as a bank then basically source that service in or we acquire it, that is then more of the strategic discussion. But I think overall, in the end, the clients, and I see it now happening in a transaction that one of my team members closed 1.5 weeks ago, that a digital asset was part of the funding of the transaction. And that was for me also a first time. So I think we are now exactly at the pinnacle where you see that there is an adaptation which is driven by the environment here, but also effectively advisors like us, we have not seen it before. But we understand the movement and we're taking stock of it. And over time, and I think that is then where the transition for a private bank will take place, is simply say, okay, we can accept a cryptocurrency because we have the trust in it. And I think that's where it starts. It's building that trust.
Very good. Thank you for your answer. And but we also have Milko here sitting with us, and they are an investment firm and doing analysis in the billions for large entities and real-world assets. Maybe you can also guide us to accelerate this process, because if I have to wait 4 or 5 years, I'm always going to pension. So that's not what I aim for. So I really honestly want that this goes faster. So maybe you can give a good hint to us, and also with your firm, that we can have a new partnership as well.
Yeah, no, sure. So I hope also that that it doesn't take 5 years, but I think what we need is more people like Paolo in private markets, who actually are able to push that, because it is a change, and for folks to get used to the blockchain technology, which we all know is superior to everything existing, is going to take a lot of education and test cases by usually the larger players that are starting to do that. I think what we're seeing trillions that are currently sitting in private markets, and that amount keeps on increasing year on year. It is starting to look for liquidity. We're seeing retail structures being built, particularly, well, in the US for a while, now in Europe on the private credit side. But again, they are extremely difficult to get access to. So you need to be a private banking client. You need to have probably a certain threshold in order to fulfill the criteria, and then you're able to invest with the likes of BlackRock, Ares, Goldman's in their private credit product that gives you superior returns. I think what we are seeing with some of those names as well is that they are now tokenizing money market funds. They are testing different use cases, because the trend of retailization, which means retail folks getting access to private markets, paired with the tokenization item, is going to create, so to say, the perfect situation for us to jump straight in. From our standpoint, I think we're watching the space and the technology very closely. Would be interesting also to hear Centrifuge and their view, because they are probably in the early stages of this, and see how we can make sure that our services, which is the fundamental value behind the assets, is used in an efficient way to allow for that transition, or to even push that transition quicker.
Martin, it's your turn to finalize this, because it's a chain that we are building to get to the final point, right? And then I can invest afterwards without having to worry about FinSam, MiFID, and all these regulations. It's going to be a little bit easier, maybe.
Maybe. Yeah, no, I think what is this time different, most likely with the advent of the money market funds you have mentioned, BlackRock, Franklin Templeton, other big asset managers going on-chain, that we see institutional adoption. What we didn't see yet, I think, and that the missing next step is bring investors on-chain. So all these money market funds, all these other tokenized real assets, they actually fighting for the same pie of on-chain liquidity. So basically this kind of USDC, USDT, whatever stablecoin liquidity on-chain, and of course fighting with crypto assets and crypto use cases. And surprisingly, I think the world is still divided. If you look at investors, and of course liquidity is driving the game, is that you basically see on-chain investors looking rather into real assets for something which has a utility, which is close to crypto, if it comes to liquidity, if it comes to tradability, etc. And that's why money market funds, in particular US Treasury, has been very successful, very simple to understand, very low risk, daily liquidity, existing existing secondary market structures and traditional finance. So basically very easy to support. And if you look at traditional investors, that is a question back to the audience here. If it comes to private credit, that I think that is something where you need traditional investor know-how going on chain, and where the token presenting private credit needs to be better than what those investors already know. And no surprise, those investors, if they are interested in crypto, they don't go on chain, they buy a Bitcoin ETF. And that is already kind of, still a reflection how basically traditional products with a crypto AUM are still incredibly growing. I think that is also a pendulum which needs to swing. So if investors understand the benefit of holding a token over a traditional paper, those things will also kind of change back, I guess. And that is what is about to happen. What it needs is, I think, stablecoin infrastructure and institutional adoption of stablecoins. That's about to happen in the moment. So it looks like we see a tsunami of stablecoins. And I think if you look at regulations, coming back to your point, that is basically built on what those regulators know already. So banks are actually better prepared, or traditional institutional players are better prepared to support a MiCA, a Genius, a Stable, what's coming in the US very, very soon. Stopping here, how do you think about it?
I think that the touch point on MiCA is very clear. That's also where we see parties basically benefiting from being a fund in that transition. And I think that ties into the need for trust and also a situation where parties are getting used to it. Sorry, can you hear me now? Okay. So what I see is that in the acceptance, there are two streams. On one end, you see it in the online banking, which go very fast, and I think that's where effectively the early adoption already has taken place, will take place further. Where I really would like to see it is indeed in the whole settlement of transactions. And I think that's where your firm did a very important development in the CLO space, a space that I've been very active in. And all that kind of efficiency improvement, I think if that is taking place in a trust environment, that will also allow adaptation by banks.
Okay, add something?
Sure.
My opinion on that? Because I've seen in the last 6 months a big shift from the banks and from the financial sector. Well, I think banks, they were already working on this, but not publicly. Now they're coming out and say, everybody now wants digital assets, investing in Bitcoin, blah, blah, blah. One of my role was also to speak to the banks in the last 3-4 years, explaining what we were doing, because we were attacked a lot of times. Like, what the hell are you doing? You are touching Bitcoin. You are doing this with companies that they are not regulated, etc. So since I worked also in the banking sector, it was my role to speak to the banks. And it was very difficult. Now, in the last 6 months, they come to me to say, hey, explain me once again why you've done this and how we can do better on that. So this is a big shift. But then there is a risk coming up. I think banks or the financial institution, generally speaking, they didn't build up the culture from the bottom inside. This is a big risk. Because now that everybody's exciting to invest in digital assets, they will just do not anything, but almost. So you can fall on the wrong company, do the wrong partnership, and then you lose a lot of money. There are risks there, and there are different risks than the normal financial sector. I mean, the financial risk, but then you have the technological risk, etc. So banks has now to build from inside the culture, not to buy a company just because they have the culture, to buy it inside. So you have to explain all your employees what you're talking about, because this brings some risks. That's a message I would like to give you today.
Okay, well, that is a very interesting message that you're actually giving. You anticipated a question that I wanted to ask, but now you already answered it. So I think we will have a discussion with our CEO later on also, to have a plan to invest for the future and make this happen already with Bill, since we have already such a very valuable and trusted business networking platform here. And this is, again, the 4th year that we're doing it. Of course, we wish that with all the knowledge and the quality that we bring on the table, we can do it again next year. Okay, that's my commitment that I give to everyone. Hopefully we can do it again. I get enough money that we can also sponsor the event, and then you guys can all come again and you are invited. Last question for you. What are we going to change, or what can we improve? A small improvement to get at the further stage of development for next year. Very small.
Yeah, I think what we really need is getting better in providing infrastructure that people who are not yet on chain can adopt.
for me is also educating the folks that hold traditional assets into the value proposition of blockchain, and hence will improve, and you end up with a lot more investors.
Then it would be very simple for one of my clients. I really would see that we do a very successful capital raising, because that will allow them to be on the forefront of the adaptation of regulation.
I think we have in Switzerland, I'm talking only about Switzerland, I don't know internationally, but we have a fantastic legal framework, but we have some problem from the FINMA side. And this is something, FINMA is the financial regulator, right? And there are some groups in Switzerland coming up to try to, I wouldn't say lobbying, but to educate them, because they are very good, but they are shifting in a too strict way, and this could damage Switzerland as the place was one of the very first places in the world. We are still ahead, but we can lose this. So we have to work on that side, the regulation, making banks comfortable to go ahead.
Very good. Well, I hope that this panel was insightful for you guys. I hope that the message that if I follow this since the last 4 years, beginning until today, we went a lot of steps forward have been done. And the quality and the feedback that I'm getting, also last night and with the people talking, I am really proud of actually what we have built up over the last 4 years. And the whole inspiration that we had in the beginning was indeed to create awareness and to create education around digital assets. And of course, this also for who just invest in traditional assets. And I think we are going in the right path, and we will make this happen and become every year more with a better performance. Thank you, everyone. Thank you, guys.